Hello, we're back again. All right, another backtesting video for the trade for week, for last week, February 9th to February 18th. All right, let's go. Let's go. So this is volatility 25 index. We're trying to figure out what happened last week and to make sure strategy still works on last week trades. Okay, so um this is where we at. This is 4 hours. And this is daily time frame. On daily, remember the process. You have to first draw your trends where markets did most rejections and tap, right? Here was one of those places, and this was how last week played out. Here, this was how last week played out. So, and this is another zone or area for trend. So I'm even kind of expecting something this new week. But before we dive into that, I would before we dive into that, what's going to happen is I'm going to first let's finish with the back test. Then I probably will make a video of the analysis that I will take for this current week regarding this our structure now, or regarding this our edge. Okay, so on a daily time frame, like I said, we already drew these things out, the zones out already. So we're looking at this. This is not where we are. We are here because we are trying to look at what happened last week. So already market is bullish. Already, this was the last low market gave us. This was the last low. But then market is in a zone, a resistance area. So it's a critical point to look out for buys because market can turn, right? So we have to check out what happened. But before this market is going to turn to a downtrend, we have to expect market to break this low here. This will be the low that we would expect market to break. This low, let me put the line there. You have to expect market to break here. Yep. I don't know if this line is straight, but I'll try my best so that this call would not be too long. This meeting or this video will not be too long. All right. So yeah, let's go down to 4 hours. So we want to see what market did the previous week, which is here, to engineer. Is it going to be a buy or is it going to be a sell? So from a 4 hours perspective, market is here. On a 4 hours perspective, this was where market closed. On the 4 hours, market is already bearish from this break of change of character here, because this was the last low that took off these highs, right? Breaking above the point. So it's already bullish. It's already bearish after it broke this place. So we have a critical point here where market reversed, but then it's a bearish move, right? We expect market to break and come back to this point to give us an entry. But then on the bigger time frame, the 1 hour time, 1 day time frame, market is still respecting the uptrend that is playing. So we are still within the 1 hour zone, the daily trading range. Why am I talking like this? Okay. So we're still within the trading range of daily time frame for a buy, okay, for bullish, but market is still within here. So if you're waiting for a buy on a daily time frame, we have this other block here, which is not yet mitigated. This one here, which has been somehow mitigated here, yeah. But later on Monday, that Monday of that week came and tapped in on that other block. which is the daily order block. Remember, I always say draw your order block from daily and leave it there. You may not know what might happen, but so that you get a scope of the range in which you're trading. So in case, what's this? Move this one first. Let me. Okay. All right. Sorry, I'm going to be using the green for the other block, while the pink is for the fair value gap. I don't even know why I use pink. Oh, all right. I hope I can hear myself. I hope it's clear. Okay, I guess so. All right, so we are still bullish until this part breaks, until we see a break here. Regardless of market being in the resistance point, we are still bullish until we see a confirmed break of structure, okay, on a daily time frame to continue downwards. But we can have a smaller trend of smaller time frame. Can have a smaller trend in smaller time frame. So it's okay. Let's see what we have. So this is the daily area. And in that daily area, the last what do you call it? The last color block that took out the high, this high, the last high, which is this, and it has been taken out. We have this other block here that took out this high. And if you look at where my hand is, it has also been taken out from here. It has been taken out from here. Yeah. You see? So we now have the main order block, which is sitting here. And if you look very well, there's a fair value gap in that point. There's a fair value gap in that area. I'll put the fair value gap. This is 4 hours. Yeah, so fair value gap will be here. Yep, same 4 hours too. Change it to dark pink. Okay. So yeah, so what you have here, remember these rules. We have these rules and trending downwards after we had our highs, our range on daily, market trended downwards. This is the trend we have where we had a low here, market created a low. So we had something like this all the way here, created this low, created this high, they came. So a trend has been created down. So our markets here, the rule says, the trading edge says trending structure to order block or fair value gap zone. Wait, if there is a trending structure to the order block or fair value gap zone, wait for a break of structure to traded direction, to your traded direction. So what we have here was a trending structure. Markets trended to that area, right? And remember, that's not just all you'll be looking out for. You'll also be looking out for the 2 to 3 rejection for a confirmation on order block or fair value gap. I'm supposed to put our fair value gap here. Yeah, so, all right. So what do we have here? We have this. So regardless of this, we need to see a shift or a break of structure, regardless of this three pin rejection. The first time market came there, it rejected on this first pin, the middle line of the order block of the fair value gap. Second one rejected the middle line. Third one went as far as invalidating the what do you call it? Invalidating the fair value gap here. After it invalidated it, it tapped on this point on the other block, just a tap. I think it was a tap on the other block and left, but that isn't all. You can still, like I said, if it's a reversal candlestick pattern that you noticed in this area, you can still take the trade if it closes above. But I would have loved to take this trade if it had closed above this full setup here. This full setup, if that's closed above here, I would say, okay, that's a sure star. But that was not my close. This was this whole point here was the first time it touched this area. The second time it touched the area is here. So I have two complete before you have this shift. But then if you miss that one, you can still re-enter on this third time in which it touched it. Now let's break it down to a 1 hour time frame to see what we have. If you had entered any of this, if you had entered from here, put your stop below this structure of the engulfing candle, put your stop below it, you will still take your profits, right? So, but let's see 1 hour. Let's see 1 hour. So this is 1 hour now. If you notice too, this is the trading range. This is the daily area. This is the 4 hours. And this is 1 hour too. But then in 1 hour, in this 1 hour, we have a fair value gap in this 1 hour here, which was also invalidated. It was invalidated in that 1 hour. Okay, so, well, so 1 hour has this thing here, has another block here, which is low. Is there any fair value gap? There's one fair value gap here, just very tiny bit fair value gap here, just between here and here. I think I'll map it out so you see. Hold on, give me a minute. Yep. Okay, so there's a fair value gap here, just between these points. If you notice, yeah. Is it close by? I want to make sure. Yeah. Yeah, it's close by. So I could name it, I could label it 1 hour. So within that time, see how market trended to that location. Market trended after the structure, after the range high, coming back down, you see how market trended. There was a trend to that place. So what you're waiting for is a break of structure. You see the trend? Market trended there. You can call this also a trend. This is a trend. This is a trend, you see? So market trended down to the order block, which is the rule we have here. And we need a break of structure. So the first time market came here, this is 1 hour. First time market came here was here. It tapped it on here. This was the first time. On 4 hours, this whole thing is the first time. This is the second one. This is the third one on 4 hours. But in this case, in this smaller time frame in 1 hour, we have this is the first time it entered fully, came in here, rejected, came in here, rejected, and tapped on the 1 hour fair value gap. If I zoom in, you would see the tap. You see it, 1 hour fair value gap, and also the daily, is it daily? No, the 4 hours order block. You see, 1 hour fair value gap is here, and the 4 hours order block. This is why I leave these things on, so that you know the specific area in which you're looking for trade. So these 4 hours order block, fair value gap is already, what do you call it? It's invalidated. So for 1 hour order block here is safe and is around the 4 hours order block. 1 hour fair value gap is safe and is around the 4 hours order block, right? So you see how it tapped in. So if you are using the 1 hour order block or the 1 hour fair value gap or the 1 hour or the 4 hours order block, which is in the same area, if you were using these two, this is a deep retracement, I guess. Yeah, this is actually a deep retracement. It's like 75% of the full move retracement. This is in the discount area of price. We have the premium and we have the discount. So this is in the low of the discount area, like the main, below the liquidity area, the main area of interest point. So when we had this, our market shifted. This shift was what we call the break of the structure. Remember, it's one of the things we're looking for here to the traded direction. When you see a break of structure like this market cleared these whole highs that was here. It cleared everything and gave you or gave us an entry. So if you had seen this market here, yeah, if you had seen this market here like this, you put your stop just below the structure. Below the structure, if you notice how I put my stop, it's below the structure. I think I should shrink it a little bit so I can see my stop. Yeah, just below the structure, just a little bit below the structure. So you won't be caught in the trap of markets return like this now, like something like this now. Something like that will not trap you, like this pin bar here will not trap you in. So you, what is your TP? 1:3, 1:4, however your engagement is, you would have taken all the way to this level, which give you 1:6, or to this level, which is giving you 1:7 point something. But that's if you're leaving your TP open, then make sure you're moving your stop. All right, try to protect your profit. Try to always protect your profit. Okay, so that is it for this one. I'll see you in the next video. For now, have a good day and like, comment, and reshare, and also drop me your thoughts on the comment section. Any questions, ask me.